Hey, welcome to Friday Fin Tips, everybody. How you doing?
I'm good.
I wasn't asking you.
Oh.
Every week, I'm talking to the people.
Oh, thought you were wanting to know how I was doing. Why are you so much higher?
Because I'm short and I gotta be stacked up there.
I know, but still. Look in the eye.
Okay, today here's what we're gonna work on. We're gonna do financial word of the day. Nasdaq historic rebalance. I get a lot of questions about this. We're gonna talk about, is that a buying opportunity? Will the market fall? Will the top 7 stocks fall? We're gonna do 2 financial truths and a lie, client edition.
Okay.
Yeah.
Okay.
And then whose joke is worse? Right?
I like that. Okay.
There you go.
Yeah, there we go. Now
Let's
we're talking.
kick it off here with the financial word of the day, something to teach you guys a little bit. Now, I did not know this word, I'll be honest with you, and Haley in here, she started coming up with, how did she come across it? Do we know?
Studying.
So she's studying
for
her license, and she asked the question. I'm like, I've never heard that word before in my life. It is a financial word. It rhymes with herpes. Eric, the financial word of the day is Persterpes.
Yep.
What in the world
It's weird.
does Persterpes mean? Tell the people.
I wonder if this all was put in there as a joke, honestly, because it's the weirdest word ever. So starting in life insurance and the insurance industry and having such a passion for proving it's all wrong and misleading is part of my goals in life here as a financial advisor. Persterpes is part of that when it comes to a beneficiary.
Okay.
And generally speaking, it can happen also like, TD Ameritrade that I used to custody with, they had it on their beneficiaries. Goldman Sachs does not right now. Nope. And so that's one that, is the catch. So Persterpes is basically, let's just say that you have 3 children. And you want to leave all of your money to those 3 children, you put them as the beneficiary. Well, then you could say, well, if one of the children dies, how it's all set up, generally speaking, is then the money's then split 50-50 instead of, 33, 34.
Okay.
With Persterpes, if you check the box, if the child who passes away has kids, it gets passed to them. I just said that because the word and how weird it is.
Yeah, it's a weird word.
It's kind of comical that it's
Is the box, does it say Persterpes?
Yes. Persterpes. And so you check the box and it gets passed to the kids of the person who passed away. So then, they would get that cut.
So you don't have to designate it further and further.
Correct.
Okay.
Yep.
And is it Persterpes?
I think it's Stirpes.
I was going to say I spelled it right, but no.
I don't know. Hold on.
So
Now you got me wondering.
the way we do it here is you have a beneficiary. You can have contingent beneficiaries if that person's not around, and you just designate them. We don't actually have Persterpes after that.
I just found the answer of why it's called that.
Why?
It's Latin. It means by branch.
Oh.
So basically, the branches of your family tree. And so this is theirs. And then by branch means that if something happens, it keeps going. So now I learned something on that. I've never known that. And so when you're learning and you're working with people and you've got all these different people that have been in the industry years and they're like, yeah, this is the weirdest word you'll ever have to talk to a client about, because you're like, all right, do you want to do Persterpes? And they're like, what?
Why even bother? It would just say, what happens if that kid dies?
Yeah, it's awkward.
Ugh. Okay. Well, there you go. You learned something there. You learned something there. Now, to continue with some of the education that I've been working on with this Nasdaq Rebalance, share a few slides with you here. So Monday, the Nasdaq will do a special rebalance, and there's a couple things there. So I'll teach Eric and you guys this as well, but the Nasdaq says we rebalance regularly so that one stock can never have more than 24% weighting in the Nasdaq. And that's because if you hit 25%, you're not considered a diversified index, and you can't be an index, so that's why they do that. They also have another rule that says any stock that accounts for 4.5% or greater, we're going to think of them as a separate piece of the index. And every time there's a stock that has 4.5% or greater, we'll put that one in the bucket and the next one and the next one. Well, those as a collective cannot go over 48% total weight. So whether there's 1, 2, 3, 7, whatever, they cannot account for more than 48%. Well, what happened is NVIDIA's earnings came out, the whole AI thing. And with all the other stocks on July 3rd, we hit 51%. And that triggers an automatic special rebalance, which only happened one other time. It was 2011 when it happened. And so basically, if we move to slide 8, here's how this is going to happen. So we're going to have to take Apple from 12.1% to 11.5%. How they determine that, I don't know the actual answer there, but that's what they have published as they're going to do. We got to take Microsoft from 12.8 to 9.8 and so on and so on and so on. So that brings the collective number of stocks that have over 4.5% to less than 48% as a whole. And so the question that I always get is, okay, well, if we have to sell off some Apple, does that mean Apple's going to go down? Should I sell my stock? Should I wait? And so I took it a step further. On the far right column, I actually did a Jazz After Dark video on this in more detail as well. But I took the numbers and said, okay, Apple, $1.4 billion has to come out of Apple. That's about 13% of the average daily trading volume. That would normally have an impact on the stock. So think of it separately for a second. On paper, Apple has to lose $1.4 billion worth of participants, and that money has to go somewhere else. That doesn't mean you have to sell your stock. It just means everything gets rebalanced that way on paper. If we go to the next slide, the reason why it's not a buying opportunity is because mutual funds and index funds are already underweight the individual stocks, Apple, Microsoft, etc. And so while Apple was at 12.9% in the index, all the funds that hold the physical stock were not at 12.9%. In fact, if you look at Apple, we broke it into a couple categories. The Apple Index, right? The first it's core, same thing, index, core, same thing. The average mutual fund is underweight Apple by 3.66%, right? So in a sense, what's going to happen is they're going to rebalance the Nasdaq, and it's going to bring most of the funds closer to the target weight, and they won't need to make any adjustments. They'll still be underweight even after the rebalance. So there won't be any selling happening there. There won't be any selling happening in Microsoft, Tesla, Amazon, Nvidia, Google, or Meta. If we look at the growth mutual funds in the middle there, it's even worse for Apple. So the rebalance will bring Apple down to, 11.5%. They're 7.2% off from being at that 11.5%. So when they rebalance, it just means they'll be less underweight. They won't need to make any adjustments. In fact, they would have to buy more in order to get in line with the new weighting in the index. They'd have to buy more Microsoft. They'd have to buy more Tesla, Amazon, Nvidia, Alphabet, but not Meta. So for fun, let's look at Meta. Meta goes from 4.4 to 3.7%. It's changing by 76 basis points, or 3/4 of a percentage point. Look at how far. In Meta, the average growth mutual fund is overweight, meaning beyond the allocation, by about the same amount. So there'll be no need for buying or selling. In fact, there'll be no need for selling in this case because the rebalance will put them in line with the index. And so this is the case this time. This is not always the case, but I just wanted to point out that difference there because a lot of people are thinking, oh my God, over $1 billion needs to come out of Apple from the index funds and the growth funds and things like that. It's not true because they already have that cash on the sidelines. So if anything, there'd be more buying that goes into these to balance themselves out if they chose to do that.
And I found if you go back to slide 8, looks as though what you were mentioning, and you were like, I don't know exactly how they form different things, but everything's based on market cap. And so, you've got your market cap, so everything's in order there that aligns with, their weighting there.
So the Dow is a price-weighted index. The higher price the stock is, the more weight you have in it. So that's why, like United Healthcare could have a big move and pull the Dow.
Yeah.
Yesterday, the two bank stocks, and so it was J.P. Morgan, Goldman Sachs, United Healthcare, because those had good days, the Dow was way higher than any other index. The S&P is weighted by the value of the company, your market cap, whereas the Nasdaq is a modified market cap index, so they allow themselves a little flexibility there. But nonetheless, the rebalance, this historic special rebalance, will not really have any effect. The market could still fall. I mean, sure, we don't like a pullback, but it wouldn't be because of rebalancing. You couldn't blame it on that, and now you know why.
That's cool. I like that.
Yeah.
You and your charts. So fancy.
I like it. I like doing this stuff. Really cool. Are you ready, mister?
Oh, yeah, I guess. What you got?
2 financial truths and a lie, and this is based on clients.
Okay.
So I'm going to tell you 3 different things about clients over the years here. You tell me which one was a lie and the other 2 are in fact true. We'll start with the first one.
Okay.
And you probably could have a good one for this too. What I think is the most interesting job that a client here had, and still, no, doesn't have anymore, but had.
Okay.
They were a sous chef. You know what a sous chef is?
Mm-hmm.
Okay. So I was a sous chef when I was like 15.
Nice.
But this was a really good sous chef. They were the sous chef at the White House for the end of the Bush presidency and the beginning of the Obama presidency. And at the time, they were making $88,000 at the time, which I thought was awesome, right? Sous chef.
Yeah.
It was so cool to have like all the questions you get to ask about preparation and do they check you and what if you put poison in there? You know, I asked all the immature questions. And that, I think, was the most interesting job to date that a client has ever had. Because, you know, you ask them, what do you do? And all that stuff.
Okay.
So that is number 1. Number 2, on March 23rd, 2020,
Okay.
which was, now we know, was the bottom from the COVID low. I had talked to a client, kind of a family friend, but talked to a client, and they said, you know what, we've talked about it. This whole thing is really messing with us. We think the world is in a bad place, and we want to sell everything. And his name was Steve. And I said, Steve, you are going to have to drive over here and physically fight me to get you out of these positions. I was like, I know them. I've known them for a long time, so it was okay to say that. And I was like, you are doing the worst possible thing you can do here. The very next day, the market started bouncing. He would have sold at the actual bottom of the market.
So needless to say, of this, that, and the other. Ha ha! You like that? You know, the fact is that you earned your keep for Steve.
I earned my keep for him. He was a little upset with me on that day, and I was like,
It's the truth.
if it's the truth, I'm like, you know,
I think that was true. That sounds.
you think that
like
sounds
that.
like something I would say?
Yeah.
Oh, like lock the doors. Steve's on his way.
Last one.
The last one is, you know, when you put your beneficiaries on your clients. Good lesson here for today. You put your beneficiaries. If you're married, you have to put your wife. You really can't get around that. But then you can put contingent beneficiaries. And I was talking to a client, and he said, I want to set this all up. And I said, okay, we'll get your wife in there. And then your kids, right? We'll put your kids next. And he said to me, no, those kids are brats. They're not getting anything. And I don't know why that hit me so much at that point, but I was like, okay, so who do you want to put? You know?
Yeah.
And he was just saying, they're spoiled little brats. They're not getting anything. Those are 3 stories. 2 of them are true. 1 of them is in fact false.
Interesting.
Yeah.
With the beneficiaries.
Sounds like you're going the middle one you think is
Middle
true.
one's true.
Okay.
I'm going the sous chef is true and the kids with brats, because I mean I feel as a parent, even though kids can all be brats at times, I'm gonna have a little hope for
This.
people here
Yeah.
and say, hey, that one's false.
In fact, the sous chef one is false.
Oh man,
Yep.
the kids are brats.
He actually said that to me, and he
Legit.
meant it. Yep.
Didn't care.
Yep.
I love primarily the people who, I have seen people who've had kids that are, just very successful, and so they're not as focused on the children.
Yep.
Others, though,
This would be that case.
that are single, never had children, or married, never had children. I love it. My favorite thing that somebody told me was, I was like, at the end of the plan, I always try to feel out like what their plans are, what their goals are, kind of talk through it without saying, you should do this or this. What are your goals with this money? Do you want to leave something to somebody, or do you not want anything left? And they said, I want my last check to bounce. And so that's my new thing. Like now it's like, okay, so, at the end of the plan, do you have a goal of having a certain amount you're going to pass to somebody, or do you want that last check to bounce? And so that's
I like it.
It's always a fun one.
I love asking when you get to the end of the plan and you're like, you're going to have extra dollars. Good for you. You saved enough. Stop, saving. And I go, what are we doing with this extra money? I love waiting to hear the answer because everybody's a little different there and has had their own life experiences and stuff. Very nice. So we made financial word of the day, Nasdaq Rebalance, 2 financial truths and a lie. You didn't win that one.
Let's joke it up. It's okay. It's
Who
okay.
now has the worst joke? And I will let you go first because you probably are going to win.
Okay. Always. All right. Do you want to hear a construction joke?
Yes.
Yeah. Sorry, I'm still working on it.
Okay. I might have this one. I might get this one. I tried to come down and think of like a dad joke for you. 'Cause
There we go.
You want to share some with your kids, and you can't often share my jokes. Well, how this goes is a slice of pie in Barbados is $2. A slice of pie in the Turks and Caicos is $2.50. And a slice of pie in Jamaica is $4.95. These are the pie rates of the Caribbean. He likes it.
There you go. There you go.
Yeah.
Okay. Nice. Nice.
Clean, right?
Yeah, I love it.
It's
I love
good.
it. I love it. I could show my kids this video and be like, look at Uncle Dusty.
Look at this joke here. Uh-huh. Well, there you go.
Awesome.
Hope you learned something today. We're trying to break this down into little segments so that you can learn something or run away if we scare you to death. So that is all we have for you. Did you see, by the way, the video where I got the closing beat where they gave me a list of 30 movie quotes?
I heard about it. I have not seen the actual video of it. I've got to watch it.
They gave it to me like 2 minutes before the show, and they're like, squeeze as many of these as you can in the show without anybody knowing.
How many did you get out of 30?
14.
14.
Yep. And it's only because I got to a point where I couldn't focus, and I was like, I think I said that one already, and I was trying to look, but I got 14 of them in there.
Nice.
Yeah.
Nice. That's cool.
Yeah.
Well, thanks for joining us. Everybody have a great weekend. And what do you always say?
Adios.